The story of the janitor who passed away in 2014 with $8 million quietly saved is a powerful reminder that wealth does not always come from high salaries, elite degrees, or lucky breaks. This man, Ronald Reed, was a gas station attendant and a janitor in rural Vermont. He didn't win the lottery or inherit money. He simply lived below his means, saved consistently, and allowed compounding to work over decades. The real lesson is that financial outcomes are often driven more by behavior than intelligence. You don't need to work on Wall Street or graduate from a prestigious university to build wealth. You need patience, discipline, and sensible habits. Financial success isn't about complex formulas, but about how you act over time. This story highlights what Ronald Reed understood about money, focusing on mindset rather than math. One of the most profound truths Ronald Reed lived by was that your savings rate is more important than your income or your investment returns. Think about it. A high-earning executive who spends every dollar they make is no closer to financial freedom than someone with a modest salary who saves diligently. Wealth isn't about what you earn. It's about what you keep. Ronald Reed fixed his own coat with safety pins and chopped his own firewood, not because he was poor, but because he chose not to inflate his lifestyle. This gap between his humble earnings and his even humbler spending was where the magic happened. That gap is your savings rate, and it's the one variable you have almost complete control over. You can't control market returns or economic cycles, but you can control how much you spend on coffee, subscriptions, or a new car. Building wealth starts with acknowledging that small, consistent savings, driven by a conscious decision to live below your means, can grow into a fortune. It's a less glamorous path than chasing speculative stocks, but as Reed's story proves, it is infinitely more reliable. Another crucial insight from his life is the incredible power of time. Compounding is often called the eighth wonder of the world, but its force is only unlocked through patience. Ronald Reed didn't get rich overnight. He got rich over a lifetime. He bought good dividend-paying stocks and held them for decades, allowing his investments to grow, pay dividends, and then have those dividends buy more stock, which in turn generated even more dividends. It's a slow, almost boring process, which is why so many people ignore it. We live in a culture that craves instant gratification. We want six-pack abs in 6 weeks and a 7-figure portfolio in 7 months. But true wealth, the kind that endures, is a marathon, not a sprint. Reed understood that the most powerful ingredient in his financial recipe wasn't a hot stock tip. It was time. He simply gave his money the one thing it needed most to grow exponentially: decades. He started saving early and never stopped, letting the snowball of his wealth roll downhill for more than half a century, growing larger and faster with each passing year. His story also teaches us to ignore the noise. In the decades that Ronald Reed was investing, the world went through countless crises, recessions, market crashes, wars, and political upheavals. The news was filled with panic and predictions of doom. Yet, he didn't sell. He didn't panic. He understood a fundamental principle. Short-term volatility is the price you pay for long-term returns. Most investors fail because they react emotionally to market noise. They buy high when everyone is euphoric and sell low when everyone is terrified, locking in their losses. Reed did the opposite. He had a simple strategy: buy quality companies and hold them, and he stuck with it, regardless of what the headlines screamed. This emotional discipline is perhaps the most difficult skill to master in investing, yet it is the most critical. He wasn't tracking his portfolio daily or reading complex analyst reports. He was a janitor, focused on his work and his frugal life, allowing his well-chosen investments to do their job in the background, undisturbed by the chaos of the markets. Furthermore, Ronald Reed demonstrated the importance of keeping it simple. You don't need to understand complex financial derivatives or algorithmic trading to be a successful investor. In fact, complexity is often the enemy of good results. Reed's portfolio wasn't filled with exotic or trendy investments. It was composed of blue-chip, household name stocks: Procter & Gamble, J.P. Morgan Chase, Colgate-Palmolive, and Johnson & Johnson. These are businesses that have been around for generations, selling products and services that people consistently need. They are stable, dividend-paying companies that grow steadily over time. His strategy was straightforward enough to be written on a postcard. Live frugally, save what you can, buy solid stocks, reinvest the dividends, and wait. This simplicity is what made his plan so robust. It was easy to understand and, more importantly, easy to stick with through thick and thin. The financial industry often tries to convince us that we need their expensive advice and complicated products, but the janitor from Vermont proved that the most effective strategies are often the simplest. Finally, the most overlooked aspect of his story is his humility. Ronald Reed never felt the need to display his wealth. He drove a used Toyota Yaris and his neighbors had no idea he was a multi-millionaire. This wasn't just about being frugal. It was about understanding that money's primary value is to provide freedom and security, not to win applause from others. So many people get trapped on a hedonic treadmill, where they upgrade their lifestyle with every pay raise, constantly chasing the next status symbol, a bigger house, a fancier car, a more expensive watch. This chase keeps them financially vulnerable, no matter how much their income grows. Reed opted out of this game entirely. He knew that the ultimate luxury money can buy isn't a yacht or a mansion, but the ability to wake up every morning and do whatever you want with your day. By keeping his wealth a secret, he protected himself from the social pressure to spend and maintained his autonomy. His wealth was for his own peace of mind and ultimately, for the benefit of his community through his charitable bequests, not for show. The story of Ronald Reed is not a financial formula. It's a lesson in character. It teaches us that building wealth has less to do with being a genius and more to do with being sensible. It requires you to master your own psychology, your patience, your discipline, and your relationship with money. He showed us that you can win the financial game by not playing the way everyone else does. Instead of chasing fast money, he embraced the slow path. Instead of seeking status, he sought security. And instead of reacting to the noise, he listened to the quiet, powerful hum of compounding working its magic over a lifetime. His legacy isn't just the $8 million he left behind, but the profound and accessible wisdom that a simple life, lived with intention and patience, is the surest road to financial freedom. If you want to learn more about the practical steps to apply these principles and start your own journey towards financial independence, be sure to follow our channel for more insights.